Good day, Professor and everyone. We are from Group 9 and will present on the assignment, which is the title The Impact of COVID-19 Pandemic on Malaysia Foreign Direct Investment.
Hi, my name is AIMAN HAKIMI bin RIZA SHUKRI and my matric number is 280428 and I'm from Group 9. Okay, for the introduction of foreign direct investment. Foreign direct investment, it refers to foreign direct investors' investment in Malaysia direct investment companies, and it will be in the form of financial instruments such as equity capital and reinvested earnings. For the other capital, it will be the intercompany loans, trade credit, and advances. And for the direct investor, is a foreign entity which is a person or a corporation owns at least 10% of the equity capital and in the form of ordinary shares or voting power of Malaysian company. Other than that, foreign affiliate statistics show the business operation of foreign-owned companies in Malaysia, where Malaysian company managed by the country of the ultimate foreign investor, which is the holding of the interest or the equity interest more than 50%, and it could be a foreign branch, a subsidiary, or a joint venture. Furthermore, for the firms controls another company in another nation, which is known as foreign direct investment. For the short form is FDI, and FDI is totally different from portfolio investment. FDI are directly involved in the day-to-day activities of the other country, and this implies that they are contributing more than just money. They are also bringing knowledge, skills, and technology.
Next, Malaysia foreign direct investment performance during pre and post COVID-19. Figure 1 depicts the foreign direct investment FDI in Malaysia from 2001 to 2020 in ringgit Malaysia billion. Malaysia has seen a steady increase in net FDI inflows over the last decade. However, FDI inflows were relatively lower in 2001 and 2009. In 2001, FDI in Malaysia recorded RM2.1 billion, which is the lowest level for the year range from 2001 to 2020. Then in 2009, Malaysia FDI registered RM5.1 billion, and the decline in FDI was mainly due to the global economic crisis that occurred in 2008 and continued in 2009. FDI flows reached their highest level in 2016 with a value of RM47 billion. The increase in FDI, 50.9% from FDI flows were channeled to services sector, mainly in utility sector and financial and insurance or takaful activities. This was followed by manufacturing and mining and quarrying sector, which accounted for 25.8% and 17.5% respectively. These three main sectors amounted to RM44.4 billion or 94.2% as shown in figure 2. The major sector of FDI in 2019 was the services sector, which contributed 53.6%. The manufacturing, mining and quarrying and other sectors accounted for 22.8%, 16% and 7.6% respectively, as evidenced by figure 3. Moreover, the COVID-19 pandemic that just began late last year made it more challenging to boost foreign investment into the country. Malaysia received a net inflow of RM14.6 billion in 2020, a 54.8% decrease due to the global economic uncertainty caused by the pandemic crisis. Global FDI flows declined by 42% in 2020 compared to 2019, according to the United Nations Conference on Trade and Development.
Following all-time high inflow in 2019, FDI in Asia is an engine of global FDI growth for the past decade, contracted by $45 billion in 2020 because of the impact of the pandemic, lockdowns measures, supply chain disruption, falling corporate earnings, successive wave of the pandemic, economic uncertainty, and postponement of investment led to decline. Other international investment activities in the region also shrunk. Announced greenfield investment declined by 17% to $88 billion. International project finance activity fell by 21% to $53 billion, and cross-border merger and acquisition sales fell to negative $4.7 billion from $9.8 billion in 2019. Despite the decline, the region's share global of FDI rose from 11.9% in 2019 to 13.7%, suggesting that it remained an attractive investment destination. FDI inflow remained more than twice the level seen during 2007 to 2008 global financial crisis, and nearly 5 times more than the annual average during 2002 to 2004 outbreak of SARS. The pandemic affected most Asian member states, with 7 seeing drop investment, some more significant than others. 3 member states bucked the trend. Brunei, Laos, Myanmar, and Vietnam were relatively resilient, with either an increase in investment or a small change in inflows. The 3 largest recipients is Singapore, Indonesia, and Vietnam in that order, which accounted for more than 90% of inflow in 2020. All recorded FDI decline. They account for most of the fall in FDI in Asia last year.
Assalamualaikum and good morning everyone. My name is NURUL binti OMAR. My matric number is 279589. Next, I would like to continue present about how COVID-19 pandemic affect FDI. Malaysia have been successful in attracting investment from foreign and domestic investors for past few years. Therefore, companies from all over the world are taking advantage while the Malaysian economy is still booming. These investments have increased the employment opportunities for people, encouraged the development of new technologies, and indirectly boost economic growth. After that, the world has been dealing with the extraordinary global health, social, and economic crisis due to COVID-19. M&E play a crucial role in the global economy, and FDI is a major source of capital investment and employment in developing nations, making it a critical component in the recovery of the global economy. Firstly, COVID-19 pandemic impact FDI, causing lasting consequences. Crises around the world are having a tremendous impact. This is due to closure of businesses, premises, manufacturing plant, and construction site to reduce the contagion of COVID-19 in investment project. Secondly, how COVID-19 affect the foreign investment is that almost every M&E subsidiary has boosted its usage of digital technology. International investors has always been drawn to Malaysia because of its highly qualified workforce, friendly legislation, physical infrastructure, and technical capabilities. The government is aware that the importance of FDI can help in economic development. Therefore, the government has allocated RM1 billion as a special incentive package for technology R&D investment in industrial parks. Next, the manufacturing sector has played an important role in the development of the Malaysian economy in the contribution of FDI. Although the trend of FDI indicates a downward trend due to the low-cost manufacturing sector, this indicated that the sector has contributed the second largest because of equity received in electronic and electrical products. This indirectly affect FDI even during the COVID-19 pandemic. Lastly, the service sector has the potential to attract quality investment in Malaysia. This is because FDI flow in Malaysia show a recovery with the highest investment figure. For example, higher equity inflows as well as stock investment fund. Therefore, it will has a beneficial impact on economic development.
I will continue with government policies to attract more foreign investment during COVID-19 pandemic. My first point is support companies through equity capital injection. Some government are assisting businesses by providing equity funding and adopting temporary ownership of certain businesses. State assistance for domestic direct investors may enable these direct investors to support their international affiliates, affecting FDI flows indirectly. Following the recession, these state-owned assets may be funded by private investors, generating chances for foreign direct investors. My second point is donor and investment policymakers should collaborate. Donors and policymakers should work together to mitigate the social effects of the crisis in developing nations. Private investment, particularly foreign direct investment, can assist to reduce the impact on these more susceptible countries. Reducing FDI and GVC disruptions can help reduce the strain on government spending. In a time when capital and public investment will be stretched, private investment will be critical in contributing to the development financing equation. The next point is screening foreign investment to protect national security and public health. As nations respond to the COVID-19 epidemic, more screening of foreign investment for national security grounds has occurred. These steps are intended to protect domestic healthcare, pharmaceutical and medical supply and equipment capacity. Government must enhance the definition of national security and public interest to embrace health emergencies. They also use FDI evaluations to defend other key indigenous enterprises and technology from aggressive foreign takeovers. The last point is facilitating investment. UNCTAD's Global Action Menu for Investment Facilities aims to make it easier for investors to define and grow their investments while also running their day-to-day organizations. Reducing compliance costs on businesses and removing regulatory roadblocks adds to more efficient manufacturing processes and speedier delivery of critical commodities during a crisis. The COVID-19 epidemic has expedited the use of online technologies and e-platforms that ensure the continuance of important government services. That's all from me. Thank you.
Good morning, Doctor. My name is Tan Peng Jung. My message number is 2777481. I would like to present the conclusion part. Alright, let me just throw out the key points. As you can see, Malaysia's foreign direct investment during pre-COVID-19 was in a steady growth trend. Foreign direct investment in Malaysia has been impacted by an outbreak of COVID-19. How does the pandemic affect FDI? As we mentioned above, COVID-19 pandemic impact FDI, causing lasting consequences. Almost every MNE subsidiary has boosted its usage of digital technology. The manufacturing sector has played an important role in the development of the Malaysian economy in the contribute of FDI. The services sector has the potential to attract quality investment in Malaysia, are the reason why pandemic affect the FDI in Malaysia. Besides, government policies such as support companies through equity capital injections, donors and investment policymakers should be collaborate. Screening foreign investment to protect national security and public health, as well as the facilitating investment should be implemented as soon as possible in order to attract more foreign investment. Economic growth can be restored to pre-crisis level if our country increase its investment. Increased investment may increase aggregate expenditure, and as a result, national income increase indirectly. I think that's all from our group. Thank you for listening.